Hi everyone, I'm Sean and this is Better Call Paul. Welcome to the channel. I am a covered call ETF investor. Like many of you that watch our videos, I'm sure you are also covered call investors. Today I'm going to go over my top 5 reasons why I am a covered call investor. First, I don't usually get too involved in any of the back and forth on Blossom. If any of you are on Blossom, feel free to follow me. I am at after the dividend. There's a big battle going between income investors and covered call ETF investors. I don't get involved in it. I don't know why. It seems that the income investors just really don't seem to like the covered call ETF investors. We all play in the same sandbox. We all want each other to do really well and earn money and have a bigger and better future. I don't get it, but that's not why I'm here. First of all, I'm going to go over my top 5 reasons. My first reason is reliable income generation. Sorry, I have everything written down on my iPad here. At their core, the funds own a basket of stocks, often blue chip, dividend paying companies. On top of that, they sell options against those holdings. The premiums collected from those options go directly to the investors in the form of distributions. In plain English, they turn volatility into cash flow. For retirees or anyone seeking a passive income stream, this can be incredibly valuable. Traditional dividends pay, maybe 1, 2, 4%. And we're covered calls. When you invest in covered call ETFs, you can get 6, 10, 20% range, depending on the strategy and the market conditions. This predictable stream of income is especially attractive to low interest rate environments, or for investors looking for alternatives to bonds, which are very low paying. My reason number 2. Lower volatility and risk management. Markets move up and down, sometimes violently. They haven't. We've been in a good market lately. Everything seems to be going up, which is fantastic. But covered call ETFs help cushion those swings. How? The option premiums collected act like a built-in, shock absorber. Even if the underlying stock price dips, that cash collected offsets some of the loss. It doesn't eliminate all the risk. No investment can, but it does smooth out the ride. For conservative investors, this is key. Instead of the roller coaster that comes along with holding pure equities, covered call ETFs can provide a steadier, calmer experience, which is me. I like that calmer experience. Reason number 3, professional management made simple. For the average investor like myself, I can't write covered calls. I don't have the experience. I don't have the knowledge. I'm not an asset manager. I'm not a financial advisor. But doing that kind of stuff requires skill and constant monitoring. You need to pick strike prices, expiration dates, roll options at the right time. And for most investors, that's not realistic. It's not realistic for me. Covered call ETFs remove that complexity. A professional management team handles a strategy, executes a trade, and optimizes outcomes, while people like you and me, the investors, simply buy the ETF like any other fund. This allows you to enjoy the benefits of the strategy without the time commitment, risk of human error, or need for specialized training and knowledge. I don't have that knowledge. I'm not going to say it is a set it and forget it investing, but with your money, you need to pay attention to it all the time. But you can truly buy your shares in whatever covered call ETF you like. obviously multiple ones, and just enjoy the ride. And you don't have to worry about what goes on behind the scenes. There's professionals to take care of that for you. Diversification combined with higher yields. When you buy a covered call ETF, you're not buying a single stock. Normally, there are some single stock ETFs out there. You're buying into a diversified portfolio, often across sectors like technology, finance, healthcare, energy, the banking industry. This reduces the risk of being overly exposed to one company or an industry in general. There's a key difference compared to a regular index ETF. A covered call ETFs gives you the added advantage of option premium income. You're going to see some, they'll use leverage, 25% leverage, 33% leverage. It can add to what their distributions are every month. So instead of relying solely on market appreciation, you're getting paid consistently regardless of whether the market is flat, slightly up, or modestly down. Now there are some disadvantages of it, but there are some great advantages. You're not going to get those if a stock goes well up in price, like the income investors. They will capitalize on a stock going up in price if it goes up sharply. But that's okay. We're cushioned with it. That's the security we like in it. Fifth, in a market of high climate uncertainty, inflation, rising interest rates, whatever is going on in the world, all contribute to volatility. And for many, this makes pure growth investing nerve-wracking. You never know what's going to happen. Covered call ETFs thrive in this kind of environment. Volatility, which normally scares investors, actually increases the premium option sellers can collect. That means higher income distributions for shareholders. In short, while trading strategies may struggle during choppy markets, covered call ETFs can turn that very turbulence into an advantage. I myself have 80% of my portfolio into covered call ETFs. The other 20% is my little gambling addiction, which is GME, GameStop, which if any of you follow it, it has been doing quite well the last few days. We have some good things on the horizons. But what I just want to say to everybody is, pay attention to your portfolio. Covered call ETFs are what I feel are a fantastic thing to invest in. Myself, I'm 53. I'm investing all my dividends I get, which right now are $1,021 a month. I reinvest them because I'm looking forward to my retirement. I'd like to retire by 60. Are ETFs for everybody? Covered call ETFs for everybody? No, they're not. For me, I feel covered call ETFs are for people like myself. I'm winding down my career. I'm looking forward to retirement, and I'm looking for a steady monthly income. I do have a rental property, so I do have that also. It's not really revenue producing. It's about $100 a month of revenue producing, but I've had amazing renters in it now for 9 years, and they're paying off the mortgage on it. So I'm lucky that way. But everybody, have a great night. If you have any questions, feel free to email or send a message or comment on the video, and I'll do my best to get back to you. Thanks, everybody, and have a great night.